Hello everyone, welcome to my YouTube channel. In this particular video, let us discuss one more problem related to income from house property. Mr. A is the owner of the house. So the owner of the house is Mr. A, the particulars of which are given below. So they have given the fair rent and house let out at 10,000 per month. So this is annual rent. So 10,000 per month they have given. Municipal tax paid by A rupees 10,000, and 10,000 is the 10% of municipal value. So they have not given the municipal value in the question directly. We have to calculate the municipal value. So they have told that the 10% of the municipal value is equal to 10,000. That is what they have told. Determine the annual value of the house if the house is vacant for 1 month and 3 months. So two situations we have to solve. First situation speaks when the house is vacant for 1 month. Second situation when the house is vacant for 3 months. So let us try to calculate. First we have to compare municipal rental value with fair rental value. Municipal rent they have given indirectly in the question. So first we have to calculate the municipal value. So they have told that 10% of the municipal value is 10,000. Municipal value in a 10% is 10,000. Then how much is 100%? So if you want to get to know that, there is a formula. So 10,000 into 100 divided by 10. If you do cross multiplication, you will get 1 lakh rupees. This 1 lakh rupees is the municipal value. So our municipal value is 1 lakh rupees. That will be compared with fair rental value. So the fair rent they have given in the question, fair rent is 90,000. So out of these two, whichever is higher, 1 lakh is higher, so it will be considered as notional rent. Whichever is higher, it will be considered as notional rent. Next, this notional rent will be compared with standard rental value. Notional rent we have found out that notional rent we have to compare with standard rental value. So the standard rent they have given in the question, they have not given anything. If nothing is given, you have to write it as 0. Out of these two, whichever is lesser, according to the general knowledge, 0 is lesser. But in solving income from house property, ignore 0. Do not consider 0 for the calculation of whichever is higher or whichever is lower. So ignore 0. So 1 lakh only will be the reasonable expected rent. Reasonable expected rent kuda 1 lakh agutte. Now this reasonable expected rent we will compare with the actual rent. So reasonable expected rent na actual rent ondike ನಾವು compare ಮಾಡ್ತೀವಿ. So there is a formula to find out the actual rent. The formula to find out actual rent is annual rent minus unrealized rent. So if we subtract the unrealized quotient of rent from annual rent, we will get the actual rent. Reasonable expected rent we have found out it is 1 lakh rupees. Now we have to find out the actual rent. For that, we require annual rent minus unrealized rent. So annual rent what they have told that is 10,000 per month. Per month ಕೊಟ್ಟಿದ್ದಾರೆ ನಮಗೆ into 12 months ಮಾಡ್ಕೋಬೇಕು. So 10,000 into 12 months if we do we will get annual rent. From that unrealized rent. In question they have not given any information regarding unrealized rent. So it will be 0. So it will be 1,20,000 minus 0. The actual rent will be 1,20,000. Now, out of these two, whichever is higher, 1,20,000 is higher. So 1,20,000 will be our gross annual value before deducting vacancy period loss. So this is for when the vacancy period loss is 1 month. Second situation, vacancy period loss is 3 months. Till here everything is same. So till the GAV before deducting vacancy period loss, everything is same because only the changes is in vacancy period loss. Now we have to reduce the vacancy period loss. For case A, they have told 1 month of vacancy period loss. So 10,000 is the rent per month into 1 month. If you do, you will get the case A vacancy period loss, that is 10,000. So if you subtract this 10,000 from 1,20,000, you will get gross annual value after deducting vacancy period loss. From that, you have to reduce the municipal tax paid by the SSE. In question, they have given that municipal tax paid by Mr. A is 10,000. So he has paid the municipal tax of 10,000. That will be deducted. Next, you will get the net annual value, that is 1 lakh rupees. Now come back to case 2. Case 2, they have told that the house is vacant for 3 months. So you will calculate 10,000 into 3 months. So the vacancy period loss will be 30,000. If you deduct that 30,000 from 1,20,000, you will get 90,000. From that 90,000, you have to subtract 10,000 tax paid by SSE. The net annual value you will get, it is 80,000. So if the house is vacant for 1 month, the NAV will be 1 lakh. If the house is vacant for 3 months, the NAV will be 80,000. This is how you need to solve the problem. Hope you have understood how to solve the problem. In my next video, I'll come back with some more problems related to income from house property.